everyone, we're live. Okay, a bit of technical difficulties. It appears that we are talking over each other on this stream. We tried to fix it, but there may be a delay in our conversation. So I will talk a lot, and then Eric and Tara will talk a lot, and we'll try not to have an actual conversation, which I feel is maybe not exactly what we're trying to do, but welcome, Fearless. So excited to be guest hosting tonight with Eric and Tara Turcotte. This is Tactical Tuesday. This is where you get to learn all kinds of tactical information for investing in real estate. And when we thought about what we should chat about tonight, it was all about kind of, I actually, when I was chatting this afternoon, it was kind of almost like not that I would call myself a president, but it's kind of like a State of the Union address, like this is what's going on, and here's what we can chat about, and here's the things that we can do, and here's the things that we like we know and we're proud of, and we're going to be strong in, and then here's some things we're going to work on. And so yeah, so bear with us. There was a bit of technical difficulties getting online. I have no banners. So if the lovely Jules is watching, I know that in the past you've come in to the group or come backstage and helped us virtually before. So if you are able to do that, I would greatly appreciate it. I'm so happy people are starting to say hi from different places. So we have Craig and Lisa from Edmonton, and Chris is in Whitby, not for long, but he's in Whitby right now. Yeah, so one of the things before we start, jumping into the content for tonight, I wanted to bring up the big event that's happening this Saturday. So I am so excited that we're all going to be together. Well, a lot of us are going to be together in Calgary this Saturday, September 23rd. And we're going to be attending an all-day event in Calgary. It's going to be a huge event. It is being held inside a movie theater. So the first real estate event being held inside a movie theater. And I am supposed to show a video presentation. I have to figure out, I think what I do is press present. Okay, and then I find a video file, and I think it might just be easier if I do share screen. Okay, share screen. Oh God. I mean, I do things. We do things on the fly quite often, so it's totally fine. This is fine.
Are we still delayed when we speak, or is it seem okay? Are we talking over each other?
Well, your voice
you
is
open yet. So
yeah.
how we're talking over
Hi everybody. Are we talking over each other? Can anybody in the chat let us know?
Yeah,
that would be
awesome.
I
guess. Okay, yeah. Well, I'm figuring that out. I'm gonna try to. Where did this? Let me just figure out where this is presenting. Okay, it's right here. Perfect. Hold on.
All fine.
I'm just gonna pause it. If only I didn't have so many things blocking my screen. I'm going back to here. I'm gonna share screen. Sorry about how entire screen. Okay, here we go. Screen one. Share. All right, here we go. Okay, so I'm just gonna minimize this, and then this. Can you guys? I can hear you still, right, Eric and Tara? Yes, there's definitely a delay.
I think so.
between us.
Yeah.
Yep.
All right, here we go. I'm gonna press play.
Here's sound.
It's like a movie trailer. I get it. All right. Okay. All right. Did we all see that like I did? I hope so. No sound on video.
We did.
We can't hear you guys. No sound. We need the sound. Oh, if only I kept the chat open while I was playing the video. But you guys saw the video though. I will try to do that again, maybe at the end. And it did look amazing. The sound, for everyone that didn't hear, sounded like an action movie trailer. So it was very intense and very exciting. So next, if it doesn't work next time, I'll just make like do, 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 like sounds like that. That was our movie
that would be good.
Have you actually heard the video, Nicole? Or are we just
I could hear
ad-libbing?
it. No, I could hear it.
Oh,
I don't know why everyone couldn't hear it, but I could hear it, and it was awesome. Anyways,
like maybe you have to share audio also. I don't know.
I don't know. I'm actually not sure. I shared. You're right. Maybe I have to share the video, but I don't know exactly how to do that. So sorry, Corey. The footage looked amazing though. I'm very excited. Very excited for Saturday. Another amazing thing about this weekend is that a lot of the people in Ignited are going to be able to see each other, and we are a countrywide investment community, and we mainly are together online. Like we see each other once a week mostly. A lot of us get together outside of the Tuesday evenings, but this will be one of the first times that we all will be together as a community for an extended period of time, and I think that it's going to be really special for all of us. So I'm very, very excited for this weekend, not just for Saturday but for Sunday and Monday as well. So we will see people in Calgary and then again in Banff. But anyways, okay, so back to the reason for this evening. We are here with Eric and Tara Turcotte. They are joining us from, I always forget exactly what the name of your town is. West something.
Westport. More closer to Kingston, Ontario.
That's right.
Yeah. Living the life on the lake. And yeah, you are affectionately named the Turkeys.
Yeah, that stems from I became a turkey by marrying the turkey. And then we had little turkeys. So that's where that came from.
That's so cute. When you were pregnant, were they like butterballs? Did you call them butterballs?
Pains in the rear is what they were. No, but honestly, how we announced for Ryan, our second, Eric wore a hat, say turkey on the way, was our announcement for the baby.
So. I still have that hat somewhere, I'm pretty sure.
And there's no turkey on the way.
No.
Yeah. We all have a turkey on the way. It's 32 units in Deep River, Ontario. That's our turkey.
That's right. Yep.
Right.
Mm-hmm.
Yeah.
For sure.
Yeah. Okay, so let's get back into the content and the whole reason why we're here today. The State of the Union address on real estate investing in Canada. No, just joking. It's not that intense, and I would not call myself any kind of authority that would be able to do that, but we definitely are, like I would say a lot of us in Ignited, but like we're here tonight. We're in the trenches, we're doing the stuff, we're out there in the different markets. And I think that as investors, like as students of Corey and Tiffany, as active investors right now, we have a lot of value to give. And that's mainly our reason for being here, is to be able to, provide some value, provide some stability, and even just start a conversation about some of these topics. So the 5 reasons to still invest in real estate today. I thought we could start with the first one, which is strategy. So I think one of the big reasons or things that we should be focusing on is choosing the right strategy. I have a graphic, but I don't know if I want to risk sharing my screen again. But but it's just like an image of the sort of like the market and how it goes up and down. And I've seen it a few times, you know, I think we see it every once in a while in presentations, just, you know, just for your memory or to jog your memory. This is what the real estate investing roller coaster of emotions look like. And it, you know, like as it goes up, it's like, wow, this is amazing. Wow, this is easy. Oh, I'm so smart. And then it starts to go down like, oh, well, you know, like things will be okay. And then as it dips, it's like, what have I done? And then it goes back up again. And I appreciate it. It is helpful because, you know, if you you know, like layer that with the actual market and how, you know, sort of like what's a buyer's market or versus a seller's market, and then the bear market, that weird one. They align. But there's this sort of like, in some of them, they show this one line that follows through it. And as it's going down the line, or as the emotion line is going down, sort of at the halfway point, you start to get to pessimism. And I think that's where we are today. I think we're at pessimism. I mean, we probably have been at pessimism for a little while, but I think right now we're in deep pessimism because I don't really feel like there's, you know, like right at the bottom yet. And we're not necessarily as excited about, we're not questioning it anymore. Like we're like, yeah, it's definitely going down, right? And so I feel like we're sort of at pessimism right now. So I think in times of pessimism, really what we need to be doing is feeling a little bit more sturdy and feeling a little bit and getting to those sort of tried and true methods and strategies. So what do you guys, where are you guys at with picking the right strategy? What do you guys think about that?
Picking the right strategy. Well, first of all, you got to figure which one that right strategy is for you, because everybody's different, right? Everybody's approach is different. Tara and I like the buy and hold. Buy a property with hopefully a bunch of built-in equity and on the buy, and then hold on to it, make it better, make it more efficient, bring your NOI up. Well, even if the market's crashing, it doesn't matter because you've still got it at a good price. Not that it doesn't matter, but you're buying and you're holding, so it's more of a long-term pitch. It's going to come back. It's going to make you money eventually. So
yeah,
buy and hold for us is one of the biggest, best strategies. The one we like the most, anyhow. We've done a few, and that's our favorite.
I think it's one of the strategies that is the reason why a lot of people got into real estate investing, and I think it's one of those fundamentals that we were taught. You know, it's like, this is why real estate investing is such a good prospect for us to build long-term wealth, is because I mean, that's what you do. You buy, you hold, and you wait. And it's because, you know, like the great saying is it's not timing the market, because we all know it goes up and down. It's time in the market, right? And you know, like the best time to have bought real estate was yesterday, was last year, 2 years ago, whatever. But the second best time is now, right? Because it's all about how much time you're going to invest in the market. And so, you know, like when we first started investing in real estate, we thought, or before we started investing in real estate, I guess, we had no idea what it really meant to pick a strategy, because we thought if you were a real estate investor, you were like, or if you were in real estate, you were a realtor or you were a landlord, right? And there was like things like building subdivisions. No idea how that happened. Like they just existed. You know what I mean? Like it just was such a big concept that we couldn't even, conceive of being an investor in like a land development. But I mean, now we are, which is super cool. And it doesn't seem so scary. So it's all about learning all the strategies that are out there and then picking the one that's right for you. So I think that where we're at in the market cycle is huge. Like, even though, like, you still need to understand where you're at in the cycle. There are certain things that you're not going to want to pick today as a strategy. And that would be, I mean, like, one of the ones you might not want to pick is doing a huge flip in the luxury real estate market. You might not want to be spending thousands of dollars on bathroom fixtures and shower systems. And in order to get like a huge bump in equity. That might not be something that would be a good strategy to pick right now. You also have to choose the strategy that's at your knowledge and your skill and your budget, right? Like, budget is very important right now. So again, like, a long-term flip might not be great if you don't know, like, if you don't know where the prices are going to go, because a flip is all about ARV. And so if you're uncertain of pricing, you're not going to do very well if you have a long-term renovation planned, because so much can happen in a few months, as we can all see. And then the third thing that I think you should think about is, what's your comfort level of where you're at right now? Like, again, think about what you feel comfortable doing, and don't move outside of that, maybe right now. The riskier things
what you understand
might be tricky. Sorry, Tara.
Yeah, sorry. We overlap there. I just saying what you know, stay in your lane, like, kind of not stay in your lane, but also knowing, building your team around your strategy and making that strong and stable, then you can grow from there when the market allows it. Make sure you have your team based on your strategy that are familiar and experts in doing what you do.
Yeah. All right, let's see what some other people wrote about for their strategies, because we had the lovely Hermel prompting us, which was a great call. So Facebook user says, I started with buy and hold in 2019 and still continue. So again, tried and true strategy. It's a really good one. I did not know about the creative financing on real estate until I tried. Somebody else who's Facebook user. If you can see the StreamYard link, you can always click that StreamYard link, and then we'll be able to see. I think everyone else can see, but we just can't see. And then Hermel, buy and hold is great for people that have time. You have to commit to holding. You're right. You do have to make that commitment to holding. And then
through the highs and the lows.
Yeah, but that's also why it could be worth it right now, right? The buy and hold, for people that know the buy and hold, you actually take the time to let that market bounce back before you even think of doing anything. So, yeah,
exactly.
That's what I'm talking about.
He's also saying passive investing can also be a strategy or an addition to your strategy. Yeah, exactly. I think a lot of us use passive investing as a cushion or an extra pillow in our portfolio. And I want to get to that with some of our other points here. So let's go on to the next one. So the second reason to still invest is, or the thing that you should be looking at is creative cash flow. So if you have properties that you currently own and you're on a variable mortgage, you can see your mortgage payments going up and up and up. And what do you do? What do you do if you're in a region that has rent caps? So our East Coast properties, so I'll speak personally. So our East Coast properties are for the most part still cash flowing. I think all of them still cash flow, which is amazing. We're lucky, because I know a lot of people who just aren't cash flowing at all right now. But we're just not able to take the money out of the property like we did when we first had, great cash flow. We don't have to put money into it every month, and any of our properties in the East Coast. We don't have to put money in, but pulling that money out right now is tough. And so you have to know your province. So in New Brunswick, we're allowed to increase our rents up to market rent. But if the increase is too much, so if it's like too much of a, like if the current rent is 600 and market rent's 1,000, you can't just increase it to 1,000 overnight, because if you do, you may have to amortize that increase, and they still won't let you go a $400 increase because that's too much. So, you know, all that regulation is there for is to try to temper the really crazy shifts in rents that we were seeing like in 2020 and 2021 and early 2022. It got really bad here, and it was really difficult for renters to, you know, for people who'd been renting their entire lives to find another place after their rents went up from, because that happened, their rents went up from 600 to 1,000. And so this regulation is meant to sort of tamp that down a bit, which I think is reasonable. But for us, luckily, like we have been slowly increasing rents over the past few years that we've been holding these properties. So we're still doing okay. But Ontario properties is another story, because, you know, a duplex that we picked up duplexes for 200,000, 230. In Ontario, our duplexes are, you know, like $1 million each. And so big mortgages, when you have increases, is really like, it makes a huge difference on your mortgage payments. I'm sure you guys know that. We all know that, unfortunately. And so, you know, like our properties that were paying for our mortgage here in Moncton are now like negatively cash flowing, which is crazy, right? To think that it goes from like a huge cash flow to something that is very much not. But so here's where being creative comes in. We have had long-term tenants in these properties, and we obviously seriously considered, and we still technically are, I guess, considering selling some of these properties. But we know that the properties would likely go to families and might not keep them as renters. And so all we did, because we know them so well, is actually just have a conversation with them. And when we had a conversation with them, we were able to just express like, look, we don't really want to sell. Here's some of the reasons that you guys probably don't want us to sell as well. We've always been really responsive landlords. And so can you guys handle, I mean, they have really low rent because they've been in there for so long, long-term tenants. Can you guys handle more than the 2% or whatever? I don't remember what it is in Ontario last year, but can you guys handle a bigger increase? And so we're not cash flowing still, but in you know, this one particular property, but we were able to increase our rent by simply having a conversation. And I know Colin often talks, you know, uses as an example, because it's just another way that if you bring a human approach, it does often help you in the end. And some people just can't do it, but you have to try. In my opinion, you just have to try. What about you guys? Any creative cash flow ideas?
Well, sure. I mean, I'm going to take one from Corey's book here. If you have the opportunity to do a skip payment on your mortgage, you know, that always helps out. If you skip one or two or one payment per property you have, obviously your cash flow bank's going to go up. I can't, you know, say I've ever done that, but Corey's told us he's had success with that, so that's good. I'm also thinking, obviously, trying to tweak your cash flow. So, you know, if you have more than one property and you can somehow tweak your expenses to come down a little, you know, that makes a big difference, right? Because it's not only, a lot of people forget, are only focusing in on that one property, but if you have, you know, two or three, you might be able to carry yourself through the hard times with your other properties that are cash flowing a little bit better, because you haven't had that tenant turnaround yet. So that's something you need to try and work out depending on your portfolio.
The medium-term rental. One of our experiences is just lately we pivoted to international students for one of ours. That's a medium-term rental just during down their school year. So now that is all inclusive, but then that comes with there's a little bit more challenges with credit checks and all that jazz. But with our single key, I think it was last week, the single key. Was that when it was? Anyways, a few weeks ago, they have stepped up in the international screening as well. But so the medium term has definitely increased our cash flow on a property that was already cash flowing. So it's offsetting some of our more expensive properties that are slightly in the negative, right?
Yeah, exactly. Yeah, and Hermel.
Sorry, there we are again. Evaluating your whole portfolio as a whole, like looking at one property, or if you have two property, look at them separately and see what opportunities there are there as well. Also storage, rental, people love to keep stuff. So if you can provide somewhere for them to store things, and that might increase your income as well.
And there's also, sorry, I didn't mean to cut you off again, Nicole. This is the last thing, then I'm done. There's always the possibility of bringing on a joint venture partner in that one property that you're losing money on. So if you're the full owner, or even if you're not, you can always bring on another partner that may give you liquid funds, which will help, carry you guys through the hard times. Instead of selling it all together, you just give up a portion of your equity.
Yeah, exactly. And I think that that's really great for properties that are appreciating, like Ontario properties, which aren't cash flowing, but are appreciating. Ontario properties that are sort of like in and around the GTA. Those are probably the biggest, I would say the number one, properties for that strategy, because that it's going to increase because everyone's just moving it. Like the GTA is not going anywhere. People are still moving there like crazy. But cash flow is hard because those mortgages are huge. So, I think that that's a great option. Hermel was telling us, find additional streams of revenue inside your properties. Like you said, like if there's anywhere where you can charge for storage, do you have a shed that's unused on your property? Do you have extra space on your driveway? I mean, of course, if anybody has a garage, you're already charging for the garage, I hope.
Should be.
Yeah. All right, let's move on. I'm looking at our time. Wow, my goodness, time flies when you're chatting like me. So our next option, or our next sort of point to come across for when we're looking for, reasons to still invest in real estate, is properties, picking the right properties. Let me just put that. Oh, I forgot to mention this one as well. This one was actually a really good one. Your insurance changes every year. Likely, a lot of us have probably seen insurance rate increases. Shop around. We have little timers in our, Monday.com that tells us when our insurance renewal comes, so that we can check to see if the increase is going to be ridiculous, and to see, to give us the opportunity to shop around for better rates, because I think that's a really good one. Okay. Sorry. We're on to picking the right property. Okay. So some properties are made for these times and some properties are not. So it's not necessarily that they're not made for these times. It's just that you could see them as being more risky. Like I mentioned before, doing a luxury home flip right now is going to be a lot more risky. However, I think that doing cosmetic flips very fast in a region that people are still moving to, that, like it's still affordable to be able to purchase a property, that still has population growth, and still has really stable employers, like those types of quick cosmetic flips, those can still do very well. And I'm sure our Crystal Crom could speak to that, because I see her still being very successful, but I see her success in her speed. She is insanely fast at flipping properties. Like
lightning.
Yeah. So yeah. Anything else? I mean, I have another one, a very big one.
Yes. Well, just to touch on that, same thing in Ontario. There's a few pockets that's still working very well along the 401 corridor. So it's not unheard of in Ontario. It's just it's a little bit riskier, right? You got to be quick.
Yeah, exactly.
Well,
build your team. Make sure you have the team for your strategy.
Exactly.
Exactly.
Oh, and here from Crystal. Her flip is already conditional. I don't even remember when she put it on the market, like this week, I think. I'm pretty sure it was this week.
Yeah.
Amazing.
That's awesome, Crystal. That's amazing. Okay. The other big property that I think is extremely important to talk about is the type of property right now that we should all be looking at are apartment buildings. I think apartment buildings are extremely well suited to investing right now, into investing in times of inflation. I remember when I first heard, like, I know there's tons of books that talk about how apartment buildings are the, it's like the inflation proof or recession proof investment. And, there are so many great books about why apartment buildings are good are good in times of inflation. But I remember I'm pretty sure when I first heard this, like, apartment buildings are your best bet to hedge against inflation. I'm pretty sure I heard it from Ray Vaza. And I was like, tell me more. So shout out to Ray, because he was like my first REI hero that I actually got to meet in person. And yeah, no, I'm excited to be like continuing the learning, because I mean, like, if you think about it, like, apartment buildings are the best property to buy in times of inflation. If you think about it, what happens during inflation? Like, prices of everyday items go up and up and up, and the average person is spending way too much money, way more money than every time I go to the grocery store. It could be with my children or without my children. I am having a running conversation with how expensive everything is. Like, I have to say it every single time. I'm like, oh my God. Yeah. I can't
Scary.
help it. Yeah, I know. But what's happening is, like, inflation, what's really happening is our money is becoming worth less. Not worthless, but worth less. Because whatever you could buy, like, you used to be able to buy XYZ with $10, right? And now your $10 can only buy you X, right? Like, that's what happens. So your money doesn't have the same buying power. And the idea is you need to put your money in an asset then that makes money, right? That will increase in value. Because even if you leave your money in the bank, so not spending it at all, you're actually still losing money because the value of the dollar keeps going down because of inflation, right? So when you choose to invest in real estate, you're choosing an asset that increases in value. But I think that multifamily is sort of like the best known, longest running sort of best bet, because the main role of, I guess, an asset manager, or like the main role of an apartment building, is to just keep tenants, right? Keep tenants, like, keep butts indoors or keep butts in beds, like, just remain steady, like having steady tenants, right? But your job is also to keep the rents high. And typically in times of inflation, rents increase because the demand increases for rental spaces. So that's one way that you always know that the property value will increase in an apartment building, because it's not necessarily going to be, it's not like a residential property where, if, there goes the neighborhood and there goes your property real estate or your property value. It's all based on making sure that you have a steady tenant and that you have steady rent increases. So as long as you are looking for, like, you need to look for buildings near things like universities, near hospitals, near governments, like government facilities that show that, because they're long-term employment providers, right? They're never, like, universities are not going away, right? The hospitals, hopefully, they're not going away, and they're always going to be providing employees, and they're always going to need places to live. So, as long as you have that really good tenant base, then your apartment building is going to always increase in value. So I just think that that's that's super important. Who loves the bank?
Yeah, you hit it right on the nose with apartment buildings, for sure.
Yeah, even the risk of, you were talking about when tenants leave, if we have a duplex or a triplex and you have one tenant leave, that definitely hurts the bottom line. And where if you lose or you're turning over one or two in a larger apartment building, that's not going to have the biggest impact. Like you're not having to fork out, affecting your cash flow as much as it would in a smaller unit.
Right.
Yeah, and once again, to touch on how apartment buildings are appraised, very little of it has to do with the market around. You know,
Yeah.
the house is selling around. 90% of it has to do with your income.
Yeah, what
and
was saying.
what your
Yeah.
building looks like. So
Yeah.
if you can keep raising your income by just even your 2% increases or whatever a year, your property is going up minimum that, if not more. So you're not losing in an apartment building where a house
Yeah.
you would be.
Yeah. And you know, one of the things I really like about when we look at numbers, like when we're looking at the numbers in our building, is that, you know, our mortgage never changes, right? Because in a commercial rate is typically just a fixed rate. You're for 5 years, we're going to be paying the same thing every month. So as our rent increases, as our income increases, all that stuff goes up and up and up and up and up. And our you know, we have this one fixed, our expenses do increase as well, but the big cost, which is our mortgage, that stays the same. So that, I mean, the difference between year 1 and year 5 on this property for cash flow is like amazing. Like I think it's 5 times the amount it is in year 1. So it's really great. Yeah. I just think that it's one of the least risky investments that you can make, right? But that's just me. I feel like that's a whole other or a whole other show.
That's right. Yeah.
Well, they say wealthy buy apartment buildings, so let's do what the wealthy are doing, right? That's
exactly. I know.
Not a new strategy.
Yeah. The third thing that I wanted to cover, touch on is creative financing. And just like, it doesn't even have to be that creative. We're on the fourth. We're on the fourth.
Four.
Yeah. You're right. We're on the fourth. Thank you. This is my favorite one, and probably because it's the one I know least about, to be honest. So we rely super heavily on our mortgage brokers. Another shout out to Adele Digg, who's on a much deserved vacation right now, but Adele Digg is one of our amazing mortgage brokers. But I'll never forget when our mortgage broker for this property, so we have we're with a different mortgage broker on this property. But she said to us, you know, like, if you have any questions, just reach out to us. We're here for you to help you and serve you. And I was like, oh my goodness. Like that was a huge lesson to me in that moment, because I was like, we should be asking them about everything, because they know so much more than us. They know the markets, they know the numbers, they know the lenders, they know the types of buildings that are getting financed, and they know the types of buildings that are not getting financed. They run, like we run our numbers in order to decide if it's a good deal, but they have to run their numbers as well. And so they are the ones, I mean, like they know if what we've brought them is going to get financed, right? So I think that's a lesson to everyone. Reach out to your mortgage broker, strike up a conversation. I think we should, in times like this, we should all be on, like constantly having conversations with our mortgage brokers, because they know a lot, right? They really know a lot. But the one sort of interesting aspect of financing I wanted to bring up in this part was CMHC, because I mean, if you are doing purpose-built rentals or purpose-built buildings, like for rentals, if you're in the construction, or if you have like a purpose-built new build, I heard a mortgage broker say, is like, this is the only kind of financing you should be using, because it is the cheapest, smartest money for you to be getting into if this is your asset class. So you guys have done CMHC financing a few times.
Yeah.
Why don't you?
It's not for the faint of heart, for sure. Everything's under a microscope, but it is so rewarding the day you get your certificate of insurance, meaning CMHC is saying, yes, you get this money, you just need to find a lender to suit your needs. So yeah, this would be our third opportunity with CMHC.
Yeah.
And our third or second MLI using the MLI Select product.
Yeah.
But also with CMHC, to dive a little bit deeper, they offer seed funding. So even if your strategy is not apartment buildings, but maybe developing or land development in multis, and they offer that as well.
Yeah, and they're CMHC, and the reason why we're plugging CMHC so much is that it's well worth the headache to deal with them with the lower rates that they offer and the higher amortization, which makes these more expensive buildings cash flow nicely. So
speaking more in Ontario, like the product is kind of the only option for something in Ontario.
Something brand new.
Yeah, brand new for sure. Yeah. But they are, I wouldn't say it's a headache. If you've got a good broker, I would say the ones we were with literally walked us through the entire thing. And answered all of our questions. So that is the key, like you said, Nicole, is to have a broker that is familiar dealing with these. They even have one of the individuals on their team used to be an underwriter at CMHC. Well, to me, that's like the perfect mix, right? To have the broker talking to people that used to use all the legalese or read all the legalese of what we need. Yeah. But when you get the big package of like 50-page documents and you have to sit down and read that with coffee or wine, whatever you choose, it's you got to read it all. But I would say it's easier because you know what you're getting into now once you do it once. But when you're in it, with our first one, me and him were like, what are we doing? What is happening, right? Like, it's consuming because it used to always be about us. That's the difference with CMHC. They don't, for commercial buildings, they don't just look at your income, your net worth. It's a piece of the puzzle, but you really need to know that the numbers, the building itself is producing itself.
Right.
That's right.
Yeah, exactly. That's how I go to sleep. Or I wake up Saturday mornings and Eric finds me reading long page documents. He's like, this is really what you're doing on a Saturday morning? I'm like, I like this stuff. Yep. Yeah. That's my thing. It's not his. I'm the details. So.
Yeah.
Same. Yeah. I'm not. I don't. So high level like points from CMHC. I mean, I know that we've had somebody come on from CMHC to give us a sort of overview. The website for CMHC is actually an amazing website. It does give you a lot of the high level points. And it gives you points is the word, like you have to have a certain amount of points to be able to get, like a reduction on your premiums or like the long amortization. But the other great thing about getting, like the COI from CMHC, which is essentially like their seal of approval, is that when you then take that and shop around to your lenders, you don't have to sort of like sell your property to them. The lenders sort of like pitch to you like, okay, so because it basically gives you this, I don't know, like stamp. It's like the investors vetted it, the mortgage brokers vetted it, CMHC has vetted this deal. So, like the lenders don't really have any issue lending to a CMHC property, which again, in these times is very helpful.
Huge.
Well, what did we have? The first week they shopped it out, we had 4 offers, right?
Right. I think we had
Kramer.
So
yeah, exactly, Hermel. You go shopping for the lender. It's not the opposite.
That's right.
My lights are turning on and off.
She's leaving, but that's okay, guys. So we know what the
my lights are turning on and off. I had to turn them on. I have a ghost. No, it's just I have bad lights down here. Okay.
Are you ready to talk about private lending, number 5?
Private lending, number 5.
You said that mentioned something about private lending. I thought she said.
She said something about a prom note, I think, but I'm not sure. I think that was way up there.
Yeah, but I'm not sure. Yeah, I'll try and find it. A promissory note, I did not think of that to acquire property.
Right. Creative or private lending is.
You just go.
Okay. So private lending, yes, you can be used for so many different things. Look at Nicole, I'm talking. Yeah, I mean, it can be used to top up your deal if you need to get that final section closed. It can be used for an entire purchase if you're doing a burr or if you're doing a build. You can actually do some private lending yourself. Lend out a little bit of money at a higher interest to offset your costs that you're losing. Maybe you're losing money, or maybe just to make a bit more money.
Yeah.
Private lending is still
alive.
Still alive and well.
It's actually more alive, I think, than it ever has been.
Yeah.
Really.
Yeah. Rates are pretty crazy right now in the private lending world.
So that's
and
one
with
way
the
that
interest
we
rates
actually.
higher, it's making it harder for.
Yeah.
Oh,
Sorry.
This is getting bad. It's making it harder for individuals to qualify at a bank, right, with higher interest rates. So if you can find creative financing, then. Oh yeah, we're going to raise our hands like we're in school again.
All right, that was
like a foam finger.
That's a way that we have found that cushions some of our properties that are not cash flowing. So he took a HELOC and we're lending with the HELOC on our properties that aren't cash flowing, and it brings in a couple extra $100, and so it makes them from like losing, I don't know, 500 to losing 300 or something like that. So we actually put another thing about
leveraging your credit line the opposite way. So there's the private lending, but there's also, we were talking about how you can take your mortgage payments or such off of your credit line that's a lower interest of what a private lend would be. So that's one tactic as well that, who was that? The Dahlia that's big on that? Dahlia from Streetwise. Yeah.
Nice. Yeah. Those mortgage brokers, they have a lot of good information, a lot of good ideas. The other thing that about private lending that, we had a conversation with an investor who we spoke with like a year and a half ago. My little guy, you're still awake, buddy? Oh my goodness. Okay.
Daddy wants me watch TV.
I told him to give you whatever you wanted.
I was gonna say, Colin's got him doing whatever they want.
He put me to sleep.
Hi.
Daddy,
I don't know where she was headed.
Daddy, they want TV.
Okay, well, go tell him you can have TV. Go tell him Mommy said so, okay?
That was where we were at.
You can go find the iPad or something, okay? It's okay. Hi. That was when you guys should have just been talking over me that whole time.
We can't. We have to raise our hands.
Sorry, we didn't raise our hands.
Mommy's phone is not working, sweetheart. Sorry, or else I would have totally given you.
No, I don't know where she's headed with the private lending, but it's to mitigate some of the expenses you might have, or could offset them, or making money to help you cash flow others.
Yeah, what I was gonna say was like we met somebody we chatted with somebody today, and we chatted with them the first time like maybe one and a half years ago, and we talked about how like our initial conversations about how they can get started because they wanted to be more active in real estate investing. A year and a half later, they came back and they're like, hey, so like life happened and they had to, pivot out of real estate investing and into whatever it was that drew them. Like, I think it was some work stuff. And so they decided that instead of like investing all this time and energy into learning these strategies and stuff like that, just give me 1 second. Okay, sweetheart? It's upstairs.
Where?
It'll be somewhere. Just go find out. They decided they wanted to take the pressure off them and just start lending, like they just want to lend. And I think at this point, it's a smart idea because
it's very time consuming. An active role is a large commitment. It is a job, right? And being consistent in the job and being respected in that job. So there's a lot of tasks, a lot of hats you got to put on when you're an active investor. So you need to know if that suits you or not. We've had that conversation with some of our passive investors as well. They're like, well, I want to learn what you're doing and this and that. But then it's like, oh, I don't have time to do it. When are you going to talk about it? I'm like, well, if you want to, it's a massive commitment.
And if it was easy, everybody would be doing it. It's not easy. So there are hard times. There are stressful
I
times.
would say,
Notice the gray hair.
yeah, I would say it's not
Children.
complicated. It's not overly
No.
complicated, but it's just not
No.
easy, right? Like,
Mhm.
yes, you can learn these strategies. You don't have to go, like, you do have to, you need to put some time into the education, but you need the time and that, I don't know, oomph to
Drive.
get through all this stuff. Yeah, the drive.
Your
But
why.
The drive, the why.
Your why.
yeah,
That comes back to Tiffany and Corey. Your why is massive.
yeah, totally.
When you just want to cry because there's water everywhere, then you've got to reflect on your why.
Yeah.
You can swear, or you can drink wine or coffee, and then you have to reflect on your why.
Yeah.
Exactly. It honestly gets you through. And I really think that, like, we're really lucky. We have like a huge support system. I got my little guy. He's back. Where's Sammy? Is he with Emma?
Yeah.
Okay.
Yeah. Well, yeah, you're just saying, through Ignited here, we have a great support system.
Turn on the TV.
Love that you can pose any type of question, and whoever has an opinion or an idea on how to fix your problem voices it and helps you out. You just lean on everybody. It's more like it's a family.
Mm-hmm.
It's a family, not a group, which is nice.
Yeah, totally.
Yeah.
100%. Okay, well, that is a lovely segue, because one of the things that you and I have been trying to do, Eric, because Tara and Colin have like full-time work during the day. So you and I have, sure, baby, you can watch down here.
We do. Yep.
Yeah, you guys, Tara and Colin work full-time, and Eric and I get to chat a little bit more. And so we've been talking about trying to do a presentation for our Ignited family in our sort of like more smaller group, talking about this latest opportunity, because it's an amazing. Try to turn it down, okay, sweetie? All the way.
An amazing opportunity, I think, is what she was going to say.
Mm-hmm.
Yeah. That she's discussing our 32 unit in Deep River,
Ontario.
Mm-hmm. Yeah. 2021 build, beautiful building.
Yeah, and so we've been talking about sharing in Ignited because it feels really nice to be able to share in that group. Like, it just feels really nice to share with, like, to get people's, like, comments and to get their eyes on it. Like, Hermel had eyes on ours, and he gave us this amazing realization that completely changed the cash flow. And I was like, thank you, Hermel. Like, that changes the outlook for this project. And I mean, like, there's a reason he's going to be starting a multifamily course, because he's got, like, the brain on that man. It's amazing. Yeah. And so, like, it was amazing running through this number, or running through these numbers with him. Like, it was so beneficial. And so, anyways, we will be doing a little show. We'll be doing a presentation for our Ignited family. I think we decided we're going to do it tomorrow, but we have like 5 minutes now. We should do a little 3-minute like overview of this project.
Sure.
You
want me to go ahead, or you want to take on?
Well, it needs to feed into this, because it says it's a quaint town.
Okay, so
someone made a comment in the chat that Deep River is a quaint little town. Well, for now it is.
Yeah. For now it is. It's a quaint little town. But to touch on that real quick, there's over 10,000 government jobs in the 20-minute vicinity. So in a town that has 0 vacancy and a township begging for more housing, I think being a quaint little town is okay. I mean, it's not gonna affect the building, especially something with a 30+ tenant waiting list. So I was referring to CFB Petawawa is only 10 minutes or 15 minutes away, and then we have Chalk River nuclear plant, which is actually being converted into a research center that they are investing $1.2 billion in.
The government is.
The government is, yeah, and that'll be 3,000 employees. So CFB Petawawa, I think I said, was 7,000. So that's just counting the 2 government workers or government entities in that area.
Yeah, and that comes with engineers, scientists, researchers, large incomes, and also the individuals that will be building the building. The engineering firm is actually the government entity that regulates the engineers, is literally right beside the building. So they can just like walk to their job every day. So I was walking around the town last week and yeah, it's pretty neat.
Yeah. I think the other amazing, so that gives us, I mean, we know we have this really steady tenant base, you know, like Chalk River's not going anywhere. You know, like the universities that are using the facilities aren't going anywhere. You know, the military base is not going anywhere. And so we always know that it's going to be a really great tenant base. And again, as the, you know, market demand in like there's an increase for properties and for rentals, that will only increase the rent as well. So yeah, we have this property. When we ran our numbers on this, you know, we kind of realized, we're like, hey, this is kind of like a long-term like maybe like MFT property or like a REIT property or like a long-term development property, like some of the big names out there that start with a color and end with another name for a river. It has very similar returns, right? In terms of year over year returns, except you get to keep the building in the end. You don't, you know, and so like you as the investor get to keep the building in the end. So that's a little bit about you know, like the Deep River property. It really is truly an amazing opportunity, and right now we're accepting limited partnerships, so we're looking for equity positions, but we're also looking for short-term lending. So short-term lending, like, you know, it can be sort of like 3 to 6 or even 12 months, and really competitive rates. So actually, I did want to jump on this question really quickly. Do you see the question at the end?
Mm-hmm.
So sometimes it can be harder to obtain financing in a smaller community, 100%, but not this one.
Yeah. So there was a whole market analysis that we did before even acquiring this property and knowing where the growth is going to be, and speaking to the township and seeing where the tenant demographic would be at. And also they're at market rents, and it is a new building. So anything newer than 2018 November, the rents can be maintained at market rent because there's no cap on the increases at this point anyways. Let's not jinx ourselves. But and the current owner of the building has been leveraging that option. So we just had to lean on our brokers when they asked those questions, and we had data to support the market rents that they'd be getting.
Yeah. It's awesome. Yeah. Okay. So it's 9 o'clock. I can't believe we've been chatting. I feel like I definitely could have chatted for longer. Maybe because I was interrupted a couple times. But thank you guys so much for coming on with us. And I will not leave without reminding everyone that this Saturday in Calgary, where so many of us are going to be together, we are going to be, you know, like talking about, you know, all kinds of strategies. We're going to be talking about the Alberta market. We're going to be talking about how to get into real estate investing again. We're going to be talking about how to raise capital. We're going to be talking about so many things. And it is going to be, you know, live on a huge stage in Calgary on September 23rd. So hope there are still tickets available. Yeah.
Jules sent a link for tickets.
Awesome. Thank you, Jules. All right. So sorry. We're now encroaching into our laser time, so I better get off.
All right. We're out.
Okay.
Bye, everyone.
Good night, everybody. Thank you.
Bye.
Bye.